Hello friends, in this video we are going to talk about a sector which I think can turn out to be a chemical like sector in India, and you already know how much return the chemical sector has provided to its shareholder in the period of 5 to 10 years. The chemical sector has done very well in India, although there are multiple factors why chemical sector has given a good run up, but two major important reasons are: one is the favorable policies by the government, and second is the policies by the Chinese government, which in turn help the Indian chemical industry. So Chinese government, in order to reduce the pollution, they shut down a lot of chemical companies, which in turn help the Indian chemical industry. And now a similar thing is happening for another sector, and that sector is steel pipe sector. Recently the Indian government imposed an anti-dumping duty on steel tubes. So earlier what was happening was we were importing these steel tubes from China because it was available at a much cheaper rate. But now Indian government has imposed an anti-dumping duty on steel pipes for next 5 years. So under this, what will happen is, if somebody from India is trying to import steel from China, then the prices of that steel will go up because of excess charges or excess taxes. And by introducing this anti-dumping duty, what the Indian government is trying to do is, they are trying to encourage the domestic producers of steel pipe to cater to the domestic demand. People will stop importing steel tubes from China, and then they will start buying the steel tubes which are getting manufactured in India. So ultimately, who will gain from this policy for the next 5 years? It is the companies who are producing these steel pipes, which I think is going to benefit a lot in the next 5 years from this policy. And we know already that India is a developing nation. The demand for steel pipe is always going to be there, because these steel pipes are used in multiple areas, in buildings, in skyscrapers, in factories, plants. So I think the demand for these products is only and only going to increase. This is what my view as of now, but we will get to know if it is correct or not by looking at the quarterly numbers, yearly numbers of these company. So I'm keeping a close watch on the numbers of these company, and in this video now we will discuss about companies which I think can do very well in the next 5 years. So let's start. So our first company is APL Apollo Tubes, but before discussing this in detail, just one clarification that these are not core metal companies. These are the companies which make products from that metal, which is steel. So do not confuse them with the core metal companies, because those core metal companies are cyclical in nature and we should avoid those companies. But companies like this, which we are going to discuss, these are the companies which can benefit because they have the pricing power of their products. So I hope there is no confusion related to that. So let's start now. So currently this company is trading at 1248 rupees, and if I look at 1 year return has been 50%, which is very good. And I remember last I discussed this company was in December, it was around 1000 rupees. From there it has now given a return of almost 20%. If I look at 5-year return, the company has provided a return of 548% to its shareholder. And if I look at the maximum return has been 8700%. And you can see the same thing which we always find in a good company, which is a chart pattern going from the bottom left to the top right. And here you can see the business of the company. APL Apollo Tubes is one of the India's leading branded steel product manufacturer. And these are the varieties of pipes that it produces, which are used in multiple things like urban infrastructure, housing, irrigation, solar plants, greenhouses, and engineerings. And one important thing about this company is the market share that this company has. So you can see that the company is the dominating player in the domestic market of steel construction pipes and presently commands 50% market share in this segment. And it has grown its market share from 27 to 50% now in FY21. And company is seeking heavy growth opportunities in 4 places, especially in skyscrapers, infrastructure, airports, and warehousing. So these are the 4 areas because of which the company is thinking that there are heavy growth opportunities, because we already discussed that India is still a developing country, so it will need a lot of infrastructure, it will need a lot of airports, warehouses, and skyscrapers also. And here you can see that the market cap of this company is 34,000 crores. So we can say it is still a mid-cap company. And now we are at the yearly numbers, and you can see that the sales are continuously growing and the profit is also growing. Only in the last 12 trailing month it is not that great, and the reason is the OPM percentage. You can see that the OPM, which was in 2021 was 8%, it got reduced to 7%, and now for 12 trailing month it is around 6%. The OPM percentage, I believe the company will be able to improve in the few quarters. This issue we have seen in almost all the companies, that the OPM percentage has dipped because of inflation and various other factors. So this we can say is a temporary issue. And here you can see the profit growth of the company. The profit growth is very decent. 10-year 27, 5-year 30, 3-year 56. Only in the last 12 trailing month we see a dip, and it is around 12%. And we have seen the reason. It is because of the dip in the OPM percentage. And if you look at the sales numbers, the sales figures are also very healthy. 10-year 25, 5-year 27, 3-year 22. And in the 12 trailing month, the sales have only increased. You can see it has increased by 39%, which is a good sign. Return on equity is also very healthy. above 20%, and the stock price CAGR is tremendous. 10-year 53%, 5-year 45, 3-year 88, and in the last 1 year 50%. So you can see that this company is growing consistently, and in the last 1 year also it has provided very good returns. And we have seen other companies in the last 1.5 years, most of them have been struggling. Now we are at the shareholding pattern for this company, and in the shareholding pattern, promoter holds around 31% stake, 24% stake is with FIIs, DIs hold around 10%, and the remaining is with public 34%. So the shareholding pattern also looks good, although we see a dip in the promoter stake, but it is not a very big dip. And now we are at the chart for APL Apollo Tubes, and you can see that this company gives a lot of chance. It gave chance to its investor here at this point, and while going up also, it is not going in a straight line, it is going with dips. So whenever you see a dip, it is nothing but the opportunity to buy in this company, because during this phase you will notice that whenever the company went down, and after that when the company went down again, it did not came back to the last level. So here you can see first it was this, second it was again at the upper side, third again little bit up, fourth again little bit up, and fifth again it was little bit up. And again at this point it came down to 1200 rupees, which again you can see the support formed at the upper bottom. Right now this company is not providing very good discount. The discount available is just 6.8%, but do keep a track on this company, and in case you like the company, you can do two things. One is wait for this company to fall again to around 1200 level, because that is its support, or you can also wait for the quarterly results. If the quarterly results are good, then you can take the decision of entering into this company. Our second company is Venus Pipes and Tubes. Currently it is trading at 730 rupees. If I look at its maximum chart pattern, it has provided a return of close to 120%, and this got listed recently in May 2022, so it has not even completed 1 year. And in 1 year period it has provided a return of 120%, which is very good. So the business for all the companies will be same, so we'll come directly to market cap and other things. So market cap you can see is very small, it is just 1480 crores. So it's a very small company. So one thing automatically comes with small cap company is high risk and high return. And the return these company will only give you if these companies are posting very good profit growth. So let's check. So now I'm at the yearly numbers for this company, and you can see that the sales are increasing at a healthy rate. March 2020 sales were 178, then it increased to 309, then 387, and now for the 12 trailing month 486. And the profit is also increasing. 12 crore profit increased to 35 crores, then 49, and now 61. And here you can see the profit growth. Last 3 year profit compounding is 100%, and in last 12 trailing month the profit compounding has been 29%. The sales growth also is very good. 3 year 48, 12 trailing month 32, and return on equity also looks very good. Last year 38%, and in the period of 3 years 47%. The stock CAGR numbers are not updated here because it has still not completed that time, but you can keep this company on your radar. In case if it keeps on producing good sales numbers, profit numbers, then this company can also give very good return in next 5 years. Now we are at the shareholding pattern, and promoter holds around 48.2%, FIs hold around 5.8%, and FIs have increased their stake in this company. Earlier you can see it was 0.67%, which increased to 5.8% in December quarter, and DIs are also increasing their stake, and the remaining is with public. So in a small company, if we see FIs and DIs, it is always a positive sign. And now we are at the chart for Venus Pipe, and you can see that currently the company stock has stopped. It is moving in a straight line almost, we can say, and it is trading in the range of 740 to 720 rupees. One good thing is that it is not going down from here, it is holding its price, so it is giving a time correction right now. Generally when the company breaks this box formation, then again we see a good upside. And similar pattern you will notice happened earlier as well. You can see here again it formed a box pattern, and then after that you can see the rally that it gave. Again it stopped here for a little bit, and then again it moved up, and again I think this is doing the same thing, but we'll have to wait and watch and see how this company performs. In this company also the discount is not very great, it is close to 6% right now. So the best thing to do right now will be to wait for the quarterly results and then take the final decision after doing your own research and study. Next company is Hariom Pipes, currently trading at 442 rupees. If I look at 1 year return, it has provided 91% return to its shareholder, very good. If I look at 5 year return, it is still same because it is the same with this company also. This also got recently listed, and it has also not completed 1 year. And this company also, I remember when I discussed last time, it was close to 350 rupees, and from there it has also provided a return of close to 20% right now. So in the phase when you have noticed that most of the companies are not doing great, these are the type of companies from the steel pipe which are giving good returns. So let's keep a track, and if these companies keep on performing the way it has been performing, and the performance should reflect not only in the share price but in the profit also, then we should invest in these companies for better return. And here you can see that the market cap of the company is just 1126 crores. So it's a very small company. And if this company from here goes by even 10x, then still the market cap will be very small. It will be just 11,000 crores. So the potential is very much there, but it will only reach that level if it keeps on producing good results, if it keeps on increasing its profit at a healthy rate. And now we are at the yearly results, and here you can see that company sales in 2020 was 161, which increased to 254, then to 433, then to 516. So clearly there is a good increase in the sales, and profit was 23 crores, which increased to 34, then to 56, and now to 68 crores. So increase in profit is also there. And here you can see that the profit compounding growth for 5 years has been 81%, and in the last 3 years has been 54%. The sales growth also is very good, 5 year 38%, 3 year 48%. Return on equity also looks very healthy. It is close to 30%. And the stock price CAGR numbers are not there, but I wish whenever the number gets updated here, the numbers are in 20s or 30s figure. That's what I am hoping, but let's see what happens. And now we are at the shareholding pattern, and promoter holds around 66% stake, FIs hold around 2.11%, DIs are only 0.37%, and the remaining is with public. So if I compare the shareholding pattern of Venus and Hariom Pipes, the shareholding pattern for Venus Pipe looks much better and stable because we have good amount of FIs and DIs there. But that's not only one criteria that we should make our decision on. If this company also start performing continuously and consistently, then we will also see FIs and DIs coming into this company also. So the king in stock market is profit. Now we are at the chart for Hariom Pipes, and you can see that this company has currently become a momentum stock, which means that it is only going up by forming upper bottoms. You can see that it formed a bottom here, then the next bottom it formed which was up, then it formed a bottom here, then here. So it is only and only forming upper bottoms, and the maximum return that you get in a stock is in the momentum stock, but provided you are able to catch it at the starting. And if you want to invest in momentum stock by looking at the momentum, then you also have to plan your exit accordingly. Whenever you see that the company has broken its momentum, then you also have to get out of that company, if your decision was only to get into that company because of the momentum move. But if your decision was to get into that company because of its fundamental, then you can stay invested in that company. So for this company also, the discount currently available is not that great. For this company also, you can either wait for the quarterly results or wait for this company to go up again and come back to its last resistance to take the support, and then at that level, if the results are good, you can think about investing in this company. So I hope this video was informative. Please understand these are all my views. Please do your own research and study before taking any buying or selling decision. So that's all in this video. If you liked the video, please hit the like button. This will motivate me to make more videos. And also, if you have any suggestion or if you want me to make a video on any specific topic, you can mention it in the comment section. And if you are new to this channel, do hit the subscribe button so that you can get regular update whenever there is a video uploaded. So bye for now. We'll meet in the next video with some new information. Thank you.